What's going on, everyone? Yesterday, I said that the market was nearing support and it was oversold. For the past few days now, I said that you could have shorted as we fell here on the SPY. This is a 15-minute chart. Could have shorted there. I gave you guys the exact numbers that you could have shorted against. I gave you guys the exact numbers that you could have shorted against here. Huge red candle, right? You could have also shorted right here. And then I also gave you a potential place where there was going to be support. But what is very, very interesting for today on the SPY. By the way, we're going to go over the SPY, the QQQ, the IWM, Bitcoin, all of the different stocks that you guys wanted me to go over, all of the major indices, crude oil, all that good stuff. All right, so I was just very excited. Let me just get right into it. All right, because today was an amazing day. Okay, so all right, so check it out. So this is the SPY. All right, and I said that support was going to be at 408.80 if we were to fall at that level. All right, so this area right here, we were just trading in between these two zones. All right. So today I specifically said, be very, very patient. Do not force any trades. Okay. And that worked out perfectly, because if you waited for SPY to approach this resistance and start trading above it, you could have bought calls as it crossed above 413.70, and you would have been able to ride it for multiple points up. We were up 3.9 points. Obviously, you wouldn't have gotten in here because this wasn't a safe entry point. So I said to be patient, let the trade come to you. All right. What's crazy is that, all right, so yesterday, a few days ago, we hit a low here at 410.60. Okay. We didn't even cross below that low, which is the most insane part. We held that support and we continued on higher. All right. So these levels are working out perfectly. What was a past support level that I mentioned to you guys, and you could have shorted against that level right here, is now acting exactly as a resistance. All right, this isn't a joke. I'm not like, this isn't, I don't edit these things to make my videos look, whoa, wow, look at what, whoa. No, I don't do that. So these are literally old levels from the past. Okay. So for right now, the SPY made a major bullish move. It consolidated a bit above. Look, there was never a close below this level. All of the candles closed above 413.70, the resistance level, which is a very, very bullish sign. Okay, so we consolidated above. We had 1, 2, 3 closes above, and then the fourth candle we skyrocketed. Okay, and yeah, you could have bought calls against this level. I posted this all over Twitter. I posted this on Instagram. You know, all those places. So that was an amazing opportunity to get into calls. And now we're trading at resistance. Okay. All right. So now that we're in a very strong move that just occurred on the SPY, the key resistance levels for tomorrow on the SPY are going to be 416.32, which is this line right here. And then the line right above it is essentially around 417. Okay, so these two levels need to be broken now. So it's going to be very, very interesting to see if we fail at these levels and you know, fake everyone out and essentially make everyone think that we're now bullish, have everyone start piling into calls right here, and create maximum pain and bounce back down to 413.70. So, or if we can break these levels of resistance, consolidate a bit, and continue on higher into new all-time highs. So this is a very, very, very important time for the overall market. Things can go really either way at this point, and that's why I said you have to be patient and let the trade come to you. And as you can see, this is the SPY on a daily chart. Look at this candle. This is a huge, massive move. We completely engulfed this candle here, and now we're trading above 50% of this candle over here from the 19th. Okay, so this is a very, very strong, massive move. We crossed above the 413.70 resistance, or yeah, resistance level, and now we're at this level of resistance at these trend lines here. Okay, so now we're still extremely oversold on the MACD, which is a very, very good sign. When you are extremely oversold on the MACD and you're approaching resistance, that gives a very high chance of us continuing up higher. Okay, so you have to keep that in mind. But again, I can be completely wrong. All right, we can be completely faked out, and everyone can become bullish right here. I'm not holding any swings in the indices overnight because it can whiplash us as we got whiplashed back here, and a lot of people lost a lot of money because when something gave a bullish signal, we had a red day the next day. Okay, so right now, that's why it's a day trader's market. We have to just trade the levels blindly. Once we break and consolidate either support or resistance, you go long or short against those levels intraday. And that's been working out perfectly for us. So now we just need to see how the SPY responds at this resistance level and if it can cross above these two resistance levels. All right, that's basically it for the SPY. We're oversold at resistance. Got to take it one day at a time. The driving force today, however, was the massive bounce in the IWM. So as you can see, the SPY only moved up 0.95%. The Nasdaq was up 0.86%, but the IWM is up 2.44%. So the IWM helped lift the rest of the market up. Okay, so that is extremely important. I mentioned that these were the support and resistance levels for the IWM. 213.06. Again, we didn't even cross below yesterday's low, which is similar to the SPY, and we ended up crossing early in the day. We ended up crossing 217.65. That was good. Look, if you had bought in calls against, let me change it on the time frame. One sec. All right, so this is 217.65 right here. This level right here, and we saw that we had a 15-minute close above it. Sorry, excuse me. The next resistance level was 218.12. Okay, we ended up breaking that as well. So once we crossed above 218.12, you could have bought calls above these levels, had a stop loss a bit lower, and followed this the entire way up. I'm giving you guys like amazing levels that you can trade against. And many people are also looking at these levels. Banks, institutions, algorithms, they're all looking to see if we cross above these levels, then we're extremely bullish. And we can see that because you see 1, 2, 3, 4, 5 consecutive huge green candles. We moved from 217.64 all the way up to 221.13 in a matter of an hour. An hour and a half. Okay, so that was good for 5 points in an hour and a half, which is amazing if you would have caught it. But that's why you have to just trade the levels blindly. And another thing that a lot of people have issues with is, look, we bought above this level, cool. But then what happens if we fall lower? I don't want to end up losing all of my money because I went all in as we crossed above. What you need to do is you need to look at these indices on a larger time frame, okay? Looking at them on shorter time frames, you might get faked out because, like, say for example, on a minute time frame, it can cross above and it's like, oh yeah, look, it crossed above 217.65, I'm gonna get long. And then, the next minute it just tumbles and you end up losing a lot of money. So in that case, what you have to do is you have to look at close. You have to wait for candles to close above certain resistance levels on larger time frames. Okay, when that happens, you have a much better chance of the trend continuing in your favor. All right, and another thing that you have to do is, as you're getting used to trading like this, right? You need to lower your position size, and you have to mentally become comfortable with trading like this. Okay, if you put in $5,000 on the first break of 217.64, and say for example 10,000, whatever, right, or $1,000 even, whatever, like is a good sizable chunk of money, right? You put that and then it reverses against you. You get demoralized and you start thinking, crap, this isn't a very good level, blah blah blah. But you have to wait for closes on larger time frames, and you buy in with a comfortable amount. You buy in with something, hey, if it doesn't go my way, it's not going to hurt the bank. So what you have to do is, say for example 217.64, right? Let me zoom in and tell you guys exactly what Okay, so 217 and 64. All right. As we crossed above this and we closed above this, you see that we closed at 217, 217.83. Okay. You could have bought calls right at this level, and you could have had these upper levels as a target. Obviously, this was going to be your target here at 220.87. And but if it started going below your below, right, you're not automatically selling it if it crosses below 217.64, because that's what market makers do. They look for a move downward to liquidate people that are long, because they know people have stop losses like at the exact cent. But that's not how you trade. Okay, you need to have stop losses. You need to give yourself a cushion. So you could have had a stop loss right there at 217 at 217.24, basically the close of this large major candle, which is also confluent with the open of the next candle, which is also confluent with all of these other levels. Okay, so you could have had a stop there, and then you could have just let the trade work in your favor. If it touches that level, then you're automatically out. That's fine. But if it doesn't touch that level, another thing, look, if it touched this level, you could have bought some more, because you only bought in initially with a small amount. If it crosses and touches back down to 217.24, you could buy in with a bit more, and then you have a tight stop if it crosses below 217.20. Okay, so you could have bought in with like $500 here, and then, hey, maybe, who knows, we're in a very, very bullish market today, or a bearish market today. I'm not sure. This could just be a fake out, get people bullish. You could have waited, only bought in with a small amount here as we crossed above and closed above, sorry. And then if we fell back down, you could have bought in another $500. And then if we cross down below this level, then you have an automatic tight stop to the cent. Okay? But yeah, that's how you trade. That's how you trade these things. And if you would have gotten here, you would have seen the next 15-minute candle. We crossed above. We moved $1.17 in 15 minutes. If you would have just gotten in as we closed above the prior resistance level that I mentioned for the IWM. I can't find it right now. But look, we crossed above all of these levels of resistance. But now we need to see how we respond on the IWM. The IWM was the clear leader today, but it needs to hold. Let me write out the levels for you guys. So this is the IWM on a daily chart. We're just keeping it very simple here. So 220.85 needs to hold as support. We can see that it's the 50% Fibonacci level. So 225.85 needs to hold as support. And the resistance level is the 38.2% Fibonacci level at 224.20. So, sorry, I mistyped this. The 38.2% Fibonacci level is 224.09. This is wrong. Okay, so these are the levels that need to hold. And look, if you didn't get in, now is not a good time to get into anything. Okay, we're literally smack dab in the middle. That's why on the SPY yesterday, we were smack dab in the middle of a support and a resistance. So that's why I said, look, you have to be patient and let the trade come to you. If you had let the trade come to you, you could have bought in as we crossed above resistance and traded it upward. Same thing with the IWM. Now that we're in the middle of 220.85 and 224.09, you do not buy anything until we see a touch of these levels. And what you can do now, so for tomorrow, what you can do is, all right, so this is the 15-minute chart of the IWM. All right, so I'm going to give you guys two hypothetical situations of what could happen tomorrow. All right, so this is 220.85. All right, say, for example, you're bullish on the market. And again, this is something with money that you're willing to test this out with, okay? Because trading is not about how much money you make. The money becomes inevitable. Trading is about making the right decisions over and over and over again and sticking to your disciplines, okay? So this is 220.85 on the IWM. If you see that, we're pulling back and we touched this level, but we closed somewhere here, whatever, you can buy a small amount of IWM calls at this level, and then you would have a stop loss right here. you would have a stop loss at 220.20 cents. If it falls down below that with strength and 15-minute candle close and everything that I said earlier, then you know that your calls are not going to work, and then you would switch back into puts. So you could buy puts as we cross below 220.20, right here. What is 220.14? So you would buy puts as we cross below 220.14 if we close below it, and then if if we cross back above right here, you would have a stop loss at 221.30. And that would be basically your levels that you can trade against, either to the short or the long side. Okay, so you would have a tight stop either way. And again, if you're not comfortable with doing it this way, it all depends on the contract size that you buy and your risk tolerance and everything. But these are the levels that you need to be watching out for. If you do choose to go long here, you could buy in a small amount if it touches, but then your stop loss would need to be 220.14. Okay. And if you do choose to go short as we cross below this, then you need to wait for a 15-minute close below 220.85 to go short. And your stop loss would be this candle right here at 221.40. Okay, so that's basically how you would play both sides, in my opinion, tomorrow. The safest bet. But again, if you're wrong about something and it goes the other way, you have to quickly pivot. And that's basically something that is difficult for me to post and everything on Twitter. But the plays and everything have been working out so perfectly. If we do see choppy action like that, then it's just, you're better off just being patient and just waiting to see what happens and waiting for extremes. So the extreme would be if we cross above 224.09. So you could wait for a cross above 224.09, which is this level right here. Wait again for a similar situation where we cross above and close above the 15-minute candle here, and then you could just go long again. So that would be the safest play that you can make. Otherwise, over here, if we just chop up and down, you just end up losing money. And if you have day trades, then you would just waste your day trades. But that's another reason why I recommend everyone get a cash account. Ooh, all right, that was a lot. Okay, so that was the IWM. Let's go into the Qs. This is literally just magic. This is beautiful. Okay, so the Qs were the weakest indice today, and they actually went lower than yesterday's their low previously. So we saw that the SPY and the IWM never crossed below their lows, but today the Nasdaq actually did cross below its lows. So I said that the support would be 332.94, resistance was 337.16, and look what happened as we crossed above 337.16. Okay, and 337.16 coincided with the March 1999 support level. Okay, so this level has been clearly acting as support and resistance all throughout this time. All right, and today was no different. Look how beautiful this was. We bounced off, right? Because the Nasdaq was pulled up by the IWM and the SPY, all right? So we bounced off. We closed. We had a strong close above 337.16, all right? We ended up going higher for another 30 minutes all over here, right? But then what happened? We ended up retesting this level perfectly. I didn't redraw this. We ended up retesting this level absolutely perfectly. This is beautiful. All right. What happened is we couldn't cross below it, and it gave enough steam for it to go way higher. And that's exactly what happened. Literally, you just trade these levels blindly, and this is really what happened. All right. So the Qs aren't giving as clean of signals and support and resistance levels. What is interesting though is the Q basically closed at the this gap area. So we gapped up from on April 14th. We gapped up from 336 to 340. To 339.33, and that's essentially exactly where we closed. So we closed right below the gap area. So this gap area is acting as clear resistance. Okay. The resistance right here, let me write it out for you guys. All right, so the resistance is going to be the prior ledge, which is at 339.33. And then the support is going to obviously be back at the March 1999 level at 337.27. So this support level is increasing because obviously the line is sloped upward. Okay, so that's the only reason why this level is increasing in number. Another level that you can have as support, which isn't as extreme, but it's right here. You can see that there's multiple touches right here, and this is also acting as pretty clean support because we also did gap up from this level. So another support level would be right here at 338.22. Okay, so those would be the levels that you can also trade around. You wait for a 15-minute close. Okay, you have to wait for larger time frame closes above these levels for you to get for you to have more bullish or bearish bias towards a trade. All right. But again, like, I don't mean to sound like a broken record. We called out it needed to stay above these levels for it to remain bullish and bearish. You could have went short here, could have went short here, you could have went short here, you definitely could have went short here. There's a lot of different opportunities that I'm giving you guys here, and I hope you guys really enjoy it. If you guys enjoy what I'm giving you and all of the information that I'm giving you every single day, please drop a like, subscribe to the channel, hit the bell notification so you get notified every time I post a video. I would really appreciate it. And so yeah, that's basically it for the SPY, the QQQ, and the IWM. All right, so now let's check out the dollar. So the dollar, obviously, so we can see that it failed to cross above this level of resistance at 91.37. Okay, we tested it, we crossed above it periodically, but we failed, which helped propel the rest of the indice market to go higher. So when the dollar is not doing well, the indices market does really well. So now we need to see if the dollar continues falling. We can see that it is still extremely oversold on the MACD. And one other thing I just want to go over, the SPY MACD super oversold. QQQ MACD even more oversold, nearing support. All right, but like, we bounced off of it. The IWM also extremely oversold. So that is a very good sign for the overall stock market to continue upward. But again, this could just be a fake out. This could just potentially be an opportunity for people to buy shorts and bring it down even lower. But again, we don't really care about that. We just trade the levels, and we're not married to any bias currently, because we are in completely unseen territory right now. We are extremely overextended, to a point where we've never been this really overextended since the .com bubble. And even more so currently. So we're very overextended. And now news is just getting even better because people are getting vaccinated, less people are dying, less people are sick. So yeah, like, who knows how far we can go up. So yeah, let's just keep an open mind for everything. And that is my, oh, forgot about crude oil. Crude oil is, thankfully, it's sitting above the 20 EMA. All right, so as you can see, this entire run up, the 20 exponential moving average, which is this line right here, it's been acting as clear support. Okay, except recently we fell down below it, but now we're trading and we bounced basically right above it. The 10 simple moving average crossed above the 50 simple moving average, which is the black over the maroon, whatever color this is. And that's also another bullish sign. The MACD is oversold on the MACD. So yeah, we can consolidate a bit here and continue on higher. That would help bring the SPY to new all-time highs because, energy sector and oil stocks, etc. So yeah, there's a lot of bullish signals in the stock market currently. If we look at the US 10-year yield, looks as garbage as the dollar, really, because we're teetering on the brink of death. We're sitting at support multiple layers of support, whatever, but it's very, very bearish. So now I think we need to retest the 50 simple moving average at 1.53%. Let's go ahead and see if that happens. But, you know, we had a somewhat of a red day, but the correlation currently really isn't there for the US 10-year yield. So this is the rut. So this is basically the IWM. And let me just clean this up. So I drew this out, and I said that we would potentially be able to break and touch, retest the March 2009 level. So if the tech sector continues to lag, and if the IWM crosses above these levels of resistance, the IWM can start leading the market as the tech sector has for, you know, the next month. So if that happens, we could potentially retest March 2009 levels from the financial crisis. So if that happens, then this is basically the level right here that we need to be looking at on the rut and the IWM. And yeah, it's really nice confluence actually if we do touch around this level. So yeah, we have to keep an eye on that as well. But yeah, so that's basically it for the major indices. Let's check out Bitcoin. Bitcoin, again, you know, we needed to fill and we needed to touch a bit more into this wick. I was saying that, you know, when we do have large wicks, it's a broken record at this point. When you have large wicks on Bitcoin, they tend to want to be filled. So you see a wick right here, large downward wick on February 22nd, that ended up being filled a bit. We see a large upward wick right here, that ended up being filled as well. Downward wick here, that ended up being mostly filled. So now the thing with Bitcoin is that at least 78% of large wicks tend to be filled. All right. So that's another reason why I said, you know, when we were trading up here at 56,000, I said we would need to touch at least 53,500. And we ended up falling even lower than 53,500. We went to 53.4. Okay. So now Bitcoin, it failed at resistance. It's falling lower, but we are. So one interesting thing though is that we're extremely oversold on the MACD, which is a very bullish sign. So if these levels of support can hold, this is going to give so much room to the upside that Bitcoin can potentially start making new all-time highs within the month, which is a very, very good sign. And then we'll see a retest of this trend line here. And by that time, Bitcoin will be trading at new all-time highs. So that is a very, very bullish sign. So one other thing that we need to look at is that Ethereum actually closed above the key resistance levels. So if we look at Ethereum on a 4-hour chart, so basically Ethereum and Litecoin and altcoins in general right now are leading Bitcoin. So Bitcoin in comparison to where Ethereum is it's down here. Okay. So people are going to look at, hey, if Ethereum and all of these other altcoins and everything, they crossed above the resistance. So because this is essentially the equivalent of 56,000. What was that? This is the equivalent of 57,600. All right. So this resistance right here is the equivalent of 57,600 on Bitcoin. And the fact that we closed above it and we're trading above that level, we skyrocketed even higher. We got close to a new all-time high already on Ethereum. That is a very bullish sign for Bitcoin. So now if Ethereum can continue on higher, consolidate above, what is this level here? 2342, and it can still hold above 2316. If we can consolidate above this area, and again, look at the MACD, we're extremely oversold. So look at how the MACD was over here, very similar to Bitcoin. We skyrocketed above resistance. So that is a very, 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 very bullish sign for Bitcoin and the overall crypto market if Ethereum can stay above these levels here. Okay. And the fact that Ethereum has done this is a very bullish sign in the longer term for Bitcoin. I'm sure you can see Bitcoin obviously doesn't look very bullish right now, but people are keying off Bitcoin. People are keying off altcoins. So back in 2018, when I initially, so I used to mine Bitcoin back in high school. I used to trade Bitcoin all throughout 2014, 2015, 2016. And after the huge bull market, 2018 was when Bitcoin was trading at around it was trading at around 3400. But the thing that helped Bitcoin out of the slumps was Litecoin. So Litecoin actually helped Bitcoin continue on higher. And by the time Litecoin made a huge run up, Bitcoin slowly began to follow. Okay, so that is the correlation between. Oh, that's what people are saying. Altcoin season. So altcoins are currently leading Bitcoin, and they're leading the Bitcoin related stocks. So the fact that Ethereum has closed above resistance levels, and if it can stay above these levels, that is extremely bullish for Bitcoin in the long run. And in my opinion, these are just dips. But if we cross below 52,400, that would be a little bit scarier. And then especially if we cross below this low here at 51,500, that's when I could be completely wrong. But yeah, we just have to key off of Ethereum currently for Bitcoin. That's basically it. Now I'm going to go over the stocks that you guys wanted me to go over 31 minutes into the video. So everyone that's still watching, I love you guys. All right, let's get right into it. TSF, it's a Canadian company, and it's obviously Canada is in shutdown. But this is a very bullish pattern. What needs to hold is 70 cents. As we can see, so this is a falling wedge pattern. Falling wedge patterns are extremely, extremely bullish patterns. This needs to break. So if tomorrow we begin to break, that is extremely bullish sign for TSF. But then the lower downward support is going to be 70 cents. If this doesn't break, so you can recreate this for yourself here. You connect this level here, down here, and you connect these wicks. If we don't cross above and we start to fall down to 70 cents, 70 cents is another good area to buy. But these levels really need to hold as support. But it looks pretty good for TSF to have a monstrous move upward. This is very similar to XL. Okay? The pattern is very similar. All right, so that's TSF. Uber. We can see Uber is extremely oversold at support. And we had a green day. We're reversing today, which is another good sign. So the key levels of resistance are going to be the 20 EMA and the 50 simple moving average right here around $56.80. Okay, so these levels are going to be resistance. But yeah, Uber looks pretty good. So tomorrow, the level that would need to hold for Uber is going to be around 54.60. Okay, so if 54.60, 54.50 can hold for Uber, then we can continue on higher. But I would be watching for those levels, okay? But all in all, Uber is extremely oversold, sitting at support, and we're reversing, like the rest of the market. Veni. Veni, this looks absolutely, like, terrible of a stock. Like, I hate trading stocks that have, like, 5-cent increments, because it's very, very hard to profit and to take profits and everything. But the interesting thing about Veni is, look, it's not even trading. I don't even know what it's doing here. But we're sitting at support, but look at this. So the MACD is overbought. So the other stocks, they were oversold. So the blue line was down here, but the blue line for Veni is up here. So that is a bearish sign potentially, because that means that it doesn't have as much room to go upward. All in all, Veni looks terrible, man. Just stop trading it. Look at it. It's garbage. What is this? It's not even. It's a bunch. Yeah, bro. It's not worth it. But Bingo looks very, very, very good. It's again a falling wedge pattern. Looks beautiful. Oversold on the MACD. We're seeing lots of falling wedges. So we were oversold at support at 512. We bounced off of that support, and now we're crossing above resistance here. Okay, so now the level that really needs to break tomorrow on Bingo is going to be $6.08, which is the prior high from yesterday. So 608 needs to break. But then the level that would need to hold is 61, which is this trend line here. And as we can see, if you Google falling wedge patterns, they are extremely bullish patterns, especially when the MACD is oversold and we're bouncing off of support. So bingo looks really, really good. But again, it really, really matters completely on the overall market. So if the overall market, so all of these signal, like there's a lot of potentially really, really bullish stocks and bullish setups, but in a matter of a day, we can just like reverse and the overall market can reverse. And that's how a lot of people can lose money. That's why right now it is a day trader's market. So just be very careful with anything that you're swinging overnight. MMEDF. All right. Okay, so we're at multiple levels of support, which is good. The level of support that we need to hold tomorrow is 211. And the other key level of support we need to hold at 204. Okay? And again, we're breaking above this downtrend here, which is a very good sign. We crossed above it periodically, but then we fell way down lower, which is a bearish sign. But these levels need to hold. If they hold, then, we can consolidate a bit more here and then cross up higher, because also the MACD is extremely oversold, which is a bullish sign. So these levels essentially need to hold on this stock here. But yeah, there's tons of other stocks. Don't fall in love and put all of your eggs in one basket ever, except in BlackBerry. So BlackBerry is also, look, another falling wedge pattern. The MACD is oversold. We're crossing above, and we actually did cross above, so that is a very good sign on BlackBerry. The level that needs to hold on support for tomorrow is going to be 847, which is the retest of this trend line here. Okay, so what might end up happening is we might end up, going a little higher, retesting this level to see what happens, and then going up even further afterward. But the levels of resistance now are going to be the 10 simple moving average and the 20 exponential moving average. So the 10 is at 887 and the 20 is at 903. So those are going to be two key levels of resistance. If we can cross above the 10 simple moving average with strength on a 15-minute time frame and cross above the 20 as well, that would be very, very, very bullish for BlackBerry. But all of the, AMC, GameStop, BlackBerry, Nokia, etc., they trade somewhat similarly. So let's see how the rest of the stocks and everything do as well. But BlackBerry currently, if you're trading BlackBerry alone, we bounced off of support at 805. We're in a very bullish pattern, and there's just a bit of resistance above. If you can cross above, then this skyrockets back up, and the risk reward currently, if you were to buy against $8, is it's there. It's a really good risk reward in my opinion currently. So that's BlackBerry. SCR, look, this is a this looks pretty bad. So we've just been falling down lower and lower. We broke down multiple levels of support. We had support at 23.18. We broke down, and then we broke down again. We had a falling wedge pattern on this stock. It broke above periodically, and then it held, but then it crossed back into it. So now we've continued down on SCR. So now I guess like the level that really needs to hold on SCR is, look, it's all the way down here. Like this isn't, don't fall in love with these stocks if you're currently in them. But the resistance that we need to break is going to be today's high at 23.52. If 23.52 can hold and break, that would be a very potential good squeeze play to the upside, because also the MACD is oversold now. And if we can cross above this and close above it on, larger time frames, that will be very, very bullish on, like I was saying earlier, for the 15-minute time frame and everything, etc. NGA, we were oversold on the MACD at support. We bounced off of it perfectly today. And support that ranges back all the way from December. But now we are at multiple levels of resistance from February, a downward resistance, like downward trending resistance from February and from March 16th. Okay, so now but we had an extremely green day today, and we're still oversold on the MACD. So the levels that need to break tomorrow, the key level that really needs to break tomorrow is going to be 1580. If 1580 can break tomorrow, that would also be a clean break above the 10 simple moving average at 1570. But we have to wait for a close on the longer time frames. So if you see the 15, the 30, if you see the 15-minute close above it, and you know the 30 and the hourly chart look good, then you can buy and trade against this trend line here at what I said, 1578, 1580. Okay, so you can have that, and we might end up breaking even higher, but then we can retest this trend line or these trend lines here, the bottom one, and then continue on higher. Okay, so just you can draw these out for yourself right here. So the levels that we need to hold is 1578. If 1578 does not hold, the level that we need to hold is 1557. So those are the two important levels on NGA. Zynga looks really, really good right now. I know you've been holding it for quite some time. Zynga looks really good. It's oversold on the MACD, but we're now retesting cleanly. Sorry. We're retesting cleanly on this 23.6% Fibonacci level at 1059. And we literally closed exactly on that level. Very, 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 very clean. Okay, so now this level obviously needs to break. And then the support would be 1040, which is a 38.2% fib. So, but you know, it looks very, very bullish because we are extremely oversold on the MACD. If we can, you know, cross above this, consolidate, then we can see much higher prices on Zynga. So that is a very potential situation currently for Zynga. So keep an eye on that. Looks pretty bullish, but these are the two levels that need to hold. But if Zynga fails to hold 1040, especially when the MACD is oversold, then you know that in the short term it doesn't look too good for Zynga. I would be careful. HCMC, we're at support. The level of support that we need to hold tomorrow is whatever the hell this number is right here. And but the caveat is that we're oversold, we're overbought on the MACD, which means that, you know, there's still a lot of room to the downside. So we can still potentially break this level of support. The next level of support that we need to hold is this level here, which are the lows from, you know, April 12th. Yeah, basically those levels we need to hold. But again, you know, it's very, very not everything is Doge. Don't, you know, just don't waste your money on bad stocks because they're cheap. All right. MVIS, same concept as a lot of these other stocks. Oversold on the MACD, sitting at support. We bounced off of that support and now we're trading at resistance. Okay, so now the resistance that needs to break is obviously today's high at 1266. But the level that we would retest at is potentially 1210. Okay, so if we can hold 1210 tomorrow, then we can continue on to the upside for MVIS, because, you know, we're crossing above the MACD, which is also very bullish, which means that we can continue on higher. But the key level of resistance is going to be this 20 exponential moving average at 1336. So if 1336 crosses and we close above that on a larger time frame, then that is extremely bullish, and that would be very, very good on MVIS. All right, GNOG. So GNOG, similar to everything else, oversold on the MACD at support. We held support, and now we're crossing back above. The resistance for GNOG is going to be the 20 exponential moving average at 1448. If we can cross above that, then the resistance level for tomorrow is going to be 1545, which also coincides very, very well with the 50 simple moving average. So it does look pretty good for GNOG because we are, you know, we're crossing above. We can see that, you know, we held this level of support. We're turning above now, and we're extremely oversold on the MACD. So when we were extremely oversold in the past, we did make a bounce, but this resistance acted as resistance. We couldn't cross above it. So yeah, the level of support that we need to hold is going to be 1255. The resistance is going to be 1545 and basically around the 50 simple moving average for GNOG. But yeah, there's a lot of better setups currently. This is kind of, it's, look at it. It's basically literally stuck in the middle of resistance and support. So you're not getting a very good risk reward on any of your trade currently. There's a lot tighter plays that you can buy like down here that are giving better buy signals. So I'd be careful on GNOG. So HEPA, it was oversold at support, but it crossed above. But the fact that it crossed above, the MACD crossed above, but we couldn't cross above resistance is actually not a very good sign. So the level that would need to break for tomorrow is going to be obviously 170, 171. That's the trend line that we've been following to the downside since March 12th on HEPA. And that level needs to break. If we can't break that, then that would be very, very bearish because we made a very bullish move on the MACD, but the stock itself did not translate with that move. So I'd be very careful with HEPA. And the level of support that we need to hold is obviously 155, which is this green level, which is 2 days ago the low. Okay, so those are your levels for HEPA. AMC, man, I love AMC, but now like we're really approaching multiple levels of resistance. So we can see that there was a downtrend from March 23rd, and we're currently in somewhat of an uptrend here, but we're at multiple levels of resistance at 990 at resistance, and the level that we need to break for tomorrow is and break and hold for tomorrow is 990. But then if we retest this trend line here, the level that we would retest is essentially 970. Okay, so 990 needs to break and 970 needs to hold. So we're, this is very, very tight. And it's not a very good sign that the MACD is already extremely overbought above the MACD. If the blue line here was down here, and we're at resistance, like we are with, the SPY, QQQ, IWM, and these other stocks, that would mean that as we cross above it, this can cross back above. But the fact that, we're overbought is not the best sign for AMC. So Cardano, again, all of the crypto market, it's basically keying off of Bitcoin and Ethereum, right? So we're currently in an uptrend. Cardano needs to hold $1.18 for tomorrow, but we are look at this, we're extremely oversold. We're sitting at support, but today we had a very red day. So 118 essentially needs to hold, 119 really needs to hold on a Cardano to continue on this uptrend here. But again, longer term, there's no options on these cryptos. So longer term, as long as Ethereum is doing really, really well, and as long as Bitcoin doesn't break the lows that it made at like 51.5, then all of these other cryptos are just going to follow up. And, we're still very early in the crypto game. Cardano isn't a scam coin. So, even if you're down for whatever, a few days or weeks, whatever, you can just hold on to it, because eventually if Ethereum makes new all-time highs, Bitcoin is going to follow, and then all of these other coins will potentially start to follow as well, hopefully. So yeah, that's basically it for Cardano. So JetBlue has earnings on April 26th. All right, so that's the first thing that you need to take into account. So usually stocks, they run up into their earnings, and then literally either that same day or close to the close of the day before, they start to dump. Okay, so JetBlue, extremely oversold. It was sitting at support here at 1894, and we made a very strong move upward. Very, very strong move upward, where there was this uptrend from February 1st, and now we're retesting this uptrend here. So now the level that needs to break above is 1997. So if 1997 can break on JetBlue, and then 2009, which is the 23.6% fib level, can also break, that would be a very, very bullish sign on JetBlue. And then, obviously, if we can consolidate above these levels, that would make a very, very strong move into earnings with the MACD extremely oversold. So overall, We just need to see how JetBlue responds at these levels of resistance. JetBlue would have been an amazing buy here at 1894. But yeah, so currently just be patient. Let's just see how it responds around these levels. Caesar had a very no, this had a really strong day. It's pretty amazing. MACD was extremely oversold. We couldn't retest yesterday's lows like the SPY and the IWM. We crossed above the 50 Fibonacci level. We crossed above the 38.2% Fibonacci level. And now we crossed and closed above the 23.6% Fibonacci level at 93.73. So 93.73 needs to hold as support. The upper resistance is going to be $98. So you could choose to buy and go long here. I have a tight stop loss below. And yeah, Caesars look really good as well. So IAG and gold and silver stocks in general right now, they look really good. So one of the a correlation that you need to have in consideration is that when altcoins are doing really well, in my opinion, gold and silver tend to do really well as well. So it's altcoin season, but you also have to take into account that gold and silver are extremely manipulated metals. So Google Boolean banks, they manipulate the crap out of gold and silver. But yeah, I'd just be very careful throwing in a lot of money into anything gold and silver related, because as soon as something looks bullish, they always just bring it down and just like create maximum pain to retail. Another thing is that we're approaching earnings on May 3rd, and we are overbought on the MACD. But, we had a very bullish close above the prior high, which was resistance at 345. So if we can stay above 345 on a IAG, that would be very good. And then the next level that would need to be tested is this 200 simple moving average, which is a very big deal, which is at 374. But to get here, you need to look at the price of gold and silver. So that would only happen if gold and silver continue to do really well. All right, so that is basically it for my video for today. If you guys are still watching all the way into the end here, look, man, you guys are the best. And I really genuinely hope that I'm helping everyone here. I hope you guys have an amazing day, and I will see you guys tomorrow.